Welcome to This Explainer. Today, we're tearing down the confusing and, let's be real, often completely frustrating walls of the credit system. We're going to give you a highly visual, totally actionable playbook to absolutely master your financial reputation. You see, the landscape of credit has shifted massively with brand new 2025 and 2026 rules that fundamentally change the game. So if you're looking to bypass all the fluff and get straight to the mechanics of how to build, repair, and leverage your credit profile using the very latest data, well, you are in exactly the right place.
Okay, let's dive into this. $200,000. Just let that sink in for a second. That is the actual tangible cost of a bad credit score. If you're looking at a $400,000 30-year mortgage, the difference between having an exceptional score and a poor one can translate to an interest rate gap that costs you up to $200,000 in extra interest over the life of that loan, right? So we're not just talking about getting a shiny piece of plastic in the mail. This is about massive, literally life-altering amounts of money. A really great way to think of it is as your financial reputation, just compressed into a single number. It's exactly like when a doctor checks your blood pressure as a quick, universal vital sign of your physical health. A lender looks at your credit score as the vital sign of your financial health. It instantly tells them your risk level. You got a 780? They feel fantastic about you. But a 520? Yeah, the alarms start ringing immediately. Here is our roadmap for today. We're going to cover 1. The financial vital sign. 2. The 5 credit factors. 3. The 2026 credit revolution. 4. Fix and build credit fast. And finally, 5. Credit myths versus reality. All right, kicking things off with Section 1, the financial vital sign, understanding the scoreboard. So what exactly is it? Well, a credit score is just a 3-digit number, usually hanging out somewhere between 300 and 850. It's calculated using data compiled by 3 major private bureaus, Equifax, Experian, and TransUnion. But here is a critical distinction. And honestly, people get this wrong all the time. This number does not measure your income, it doesn't measure your assets or how wealthy you are. It strictly measures your documented history of handling borrowed money. That's literally it. And lenders interpret that 3-digit number through some very specific tiers. You've got fair sitting between 580 and 669. Good is from 670 to 739, and then exceptional is way up there at 800 to 850. Pushing your score from fair into those good or exceptional tiers, it doesn't just mean your applications get approved. It means lenders will actually start competing for your business, unlocking the absolute best interest rates available in the entire market.
Moving on to Section 2, the 5 credit factors, the FICO math decoded. Let's look at how the points are actually scored.
Here is the genetic makeup of your FICO score. A massive 35% is your payment history. Guys, just one 30-day late payment can cause a rock-solid score of 780 to plummet by 90 to 110 points in a single cycle. It's brutal. Next up is credit utilization at 30%. That's just how much of your available credit you're currently using. Then we have length of credit history at 15%, and finally, credit mix and new credit, each making up 10%. So the bulk of the game is clearly won or lost in those top 2 slices, paying on time and keeping those balances low.
So the absolutely crucial point here is this: credit utilization has no memory. If you maxed out your card 6 months ago, the scoring models don't hold a grudge. The second you pay down those balances and the new lower balance is reported, which is usually right at your statement close, your score rebounds almost instantly. Paying down your revolving balances is for sure the absolute fastest acting strategy you have to boost your score. All right, let's jump into Section 3, the 2026 credit revolution. Breaking news on mortgages, medical debt, and BNPL. Let's walk through this timeline chronologically because these are massive regulatory milestones. Back in 2022, the FHFA validated new credit models. Fast forward to June 2025, and FICO launched its very first scoring model to track buy now, pay later transactions. Then a huge earthquake in the housing market hit in July 2025. Fannie Mae and Freddie Mac officially began accepting VantageScore 4.0 for mortgages. And by January 2026, a massive wave of new state-level medical debt bans officially went into effect. There is such a wild contrast between the old world and the new one. Classic FICO, the old monopoly, completely ignored your on-time rent payments and totally ignored your buy now, pay later history. But the newly approved Vantage Score 4.0 and FICO 10T actually reward you for paying your rent and utility bills on time. Plus, Vantage Score 4.0 entirely excludes medical collections. Now, while a sweeping federal CFPB rule to ban medical debt was recently struck down in a Texas federal court, 15 individual states, including heavy hitters like California, New York, and Illinois, have passed laws to ban medical debt from impacting your credit anyway. This is a massive, massive advantage for renters and millions of people dealing with medical billing.
We also absolutely have to talk about phantom debt. Up until recently, if you used platforms like Affirm, Klarna, or Afterpay, those installment plans were totally invisible to the credit bureaus. But with FICO 10 BNPL launching in 2025, this data is now being scored. A year-long FICO study actually found that for 85% of people, this new tracking moves their score by about 10 points up or down. If you pay responsibly, it actually builds your credit, but if you miss a payment, it damages it, exactly like a credit card would.
Section 4. Fix and build credit fast. Actionable strategies to repair your profile.
Let's move to your fast repair action plan and see how this all builds. Step 1. Go to annualcreditreport.com and pull all 3 of your reports. Access is currently free every single week. Step 2 is to dispute errors aggressively. A landmark FTC study found that literally 1 in 5 consumers has a verified error on their report. The CFBP shows that successfully resolving a dispute raises a score by an average of 25 points. That's huge. Step 3, just like we talked about earlier, is gaming the reporting cycle by paying down your card balances right before the statement closing date. Now, if you're starting from scratch or maybe trying to rebuild, you have some truly great alternative tools available. Secured cards allow you to use a cash deposit as your credit limit, establishing history with zero risk to the issuer. You can also become an authorized user on a trusted family member's old, well-managed credit card. When you do this, you legally piggyback right onto their perfect payment history. And finally, tools like Experian Boost can instantly link to your bank account to give you credit for paying your Netflix, your cell phone, and your utility bills.
Section 5. Credit myths versus reality. Rapid-fire corrections to common misconceptions. Let's do a quick reality check.
Okay, rapid-fire time. First, checking your own score hurts it. False. It's a soft inquiry, absolutely zero impact. Closing old cards helps. No way. False. That lowers your available credit and hurts your account age. Carrying a balance builds credit. Completely false. Paid in full, carrying a balance literally just wastes your money on interest. Income affects your score? False again. Your salary is nowhere in the FICO math. And finally, legitimate repair companies can remove accurate negative info. False. No one can legally remove accurate, timely data from your report. Seriously, don't fall for the scams. Well, we've covered the FICO math, the 2026 rule changes, and the exact tools you need to build and repair your profile. So I want to leave you with this final provocative question. What does your financial vital signs say about you today? Your credit score is no longer a mystery. It's a measurable, highly manageable tool. Take the strategies from this explainer, pull those free reports this week, and start actively mastering your financial reputation. Thanks so much for joining me.